The bond market is much bigger than stocks and crypto combined. Yet, 90% of traders ignore it. Whether you want to make money from this blind spot or simply understand bonds, you have found the right video. But alright, so let's begin here with the very important question: what is a bond in the first place? And I actually want to start here with a quote from Ray Dalio, which is a very famous hedge fund manager. And what he basically says is one man's debt is another man's asset. And this quote right here is a great way to think about bonds, and you will definitely understand this quote soon. Because what is a bond? Well, a bond is basically just a loan. A bond is a loan. You lend money to either a government or company, and they promise to pay you back later with interest. That relationship is a bond. So when you buy a bond, you are the one lending money. So a bond is basically a contract that you lend money to someone, and that bond you can think about as a paper and a confirmation that you have lended the money. And why would you do this? Well, you will get paid a fixed amount of money every year. This is called a coupon, and at the end of the bond's term, this is called maturity, you will get your full money back. So let's take a look at a very simple analogy here. Think of it like this. If you give $1,000 to the US government today, and they pay you $40 each year for 10 years, and then return your $1,000 at the end. And this bond certificate or bond paper is valuable to you. This is an asset because you'll get more money later, and it's a debt for the government because the government has to pay you money both every year and at the end of the period. And a bond works in this exact way, but it's basically on a much larger scale. But now let's quickly take a look at the different types of bonds. First of all, we have something called Treasury bonds. And this is something you might have heard about, especially recently. And Treasury bonds are simply bonds issued by the US government, and they are generally considered the safest. We also have corporate bonds, and these are bonds that are issued by companies. And they usually pay more interest because they have more risk. In general, the more risk you take, the more interest you need in order to sort of cover for that risk. You also have something called municipal bonds. This is not as common, but these are bonds issued by states or cities to maybe fund more local projects. But for this presentation, we will focus on Treasury bonds because they are by far the most important ones, and these are really the bonds that affect the global markets the most. But alright, so now let's take a look at something very important because, alright, so this video was actually just a very short clip from our full bond market guide right here on YouTube. To watch the full guide, simply click or tap on the screen right here. I hope I will see you all over there very, very soon.